Hi folks, Scott here, and this is the wrap for Tuesday, November 26th. So today, depending upon the market, was either very quiet or not. Russell and NASDAQ actually put in some trend days and new highs, but the S&P and the Dow got hammered into the close and ended up with basically dojis. If you look real closely here, I don't know if you can tell, but we put in a higher high. It's actually a 200-day high in the ES by one tick, but we finished at a doji. So dojis are often signs of indecision by market participants. I don't think today's any different, but what matters the most is the position relative to a 10-day moving average. So whenever you see a doji, you generally want to think about the market's pausing with possibly a reversal back to its 10-day moving average. So at least in the short term. So with that said, I thought it'd be helpful to show you the results of fading gaps after a 200-day high was sample size a little bit too small. A 30-day high and a doji. 30-day high that finishes as a doji, independent of whether or not it closed higher or not. And there you go. So odds slightly favor a gap down. That's probably close enough just to be noise. Using an end of the day stop, however, the numbers are extremely good, extremely high probabilities. Average gap about 3 points. So you take any number, anytime you see me do back testing, I'm always doing 10 contracts on the ES. So the simple rule of thumb is to remember divide the dollars by $500, dollars shown here by 500 to equal the number of points. So using an end of the day stop, not something I recommend, but a good place to start your analysis. 3 points. A little more than 3 points is the average winner in both directions. Average loser, however, close to 10 points. See that? So you can get some trend movements, though a little bit rare on this small size. So I'll rerun these numbers for our members in the morning using our MTG stop parameters to confirm the tradability or fadeability of entering at the open. And as always, I'll defer to our gap guides in the TGP worksheet, today's gap play worksheet, before making my final decision. But it doesn't appear as risky as I thought it may for fading a down gap after such a pattern, at least not historically based upon these criteria. All right. Now today, was a fairly quiet narrow range day as we get into the Thanksgiving week. So not real surprising there. Let me show you what the worksheet showed going into today. It was a little bit neutral for fading a gap up. So if you're new or confused, 4 opening areas represents 5 different potential opening zones for each of the 8 indices. So I just take all those 8 indices right here in the different zones, and they can be lumped into 4 potential opening areas and averaged. It's a great, handy, simple reference. So for gap up, anywhere between the high and the close of yesterday, slightly attractive. I'm looking for 60 and 1.3. Meets the win rate, not quite profitable. So I'm open-minded is the way I think about that. And then the gap down was looking a little bit more favorable to me. No unique day factors and unique patterns. False down day, that means we had a red candlestick but closed higher. That was actually only applied to the ES because the spider, I believe it was the spider and the INX both closed lower. So bottom line is I discount this number a little bit. It didn't show much anyhow. And I'm not going to show you the guides. The average I think is enough. I'll show you my comments. So as I add it to it, last night's daily wrap, I talked about a unique pattern. That showed a little bit of risk for shorting up gaps in favor of the long side, which is really different than what I thought it would show as I talked about. And bottom line, slightly attractive historical odds, neutral, unique patterns. And if we open with at least a point of opportunity, and the 2 of the other 3 futures were opening in the same direction, I would fade the ES with a half-size position. Well, caps melted away. And ES opened almost exactly flat. Russell opened almost exactly flat, but did put in that trend day I mentioned. Same with the NASDAQ. NASDAQ actually opened up a little bit. A little fake out to the south side. Market loves to do this. Right, it's been doing it all year. And actually had a gap down in the Dow. So just mixed openings, nominal gap, no trade for me. 15-minute and first hour range trades were too mixed for me. I didn't see any setup that looked good. So I did no trades today. It was a quiet day. It doesn't look like I missed much, as the range was pretty nominal, only about 8 points here. So much less than it has been. Tomorrow will probably be a narrow range day as well. Probably the best trade and maybe the only trade of the day would be the opening gap. Perhaps a 15-minute range trade after that. I think you're definitely pushing your luck as we get into folks leaving for the Thanksgiving weekend. So there's a little food for thought going into tomorrow. Have a great night, and I'll be back here tomorrow for a daily video and wrap. We will be closed in the trading room on Friday. However, in Match the Gap offices will be closed, but all of our data will be posted per normal. The gap guides, range guides, price guides, and MTG closing guides will be posted next week, either Monday, should be Monday, possibly Tuesday if we run any hiccups. I want to give my team a little bit of wiggle room. But definitely Monday or Tuesday, doing a webinar next Thursday. Watch your email if interested. And what else? I think that's about it. Have a great one. Happy Thanksgiving, and we'll either see you tomorrow or next week. Take care.